Hello, everyone. Welcome to the market opening bell on Monday, August 11th, your 10-minute guide to the stock market. The leaders of the US and Russia have confirmed a meeting in Alaska on August 15th to discuss a long-term peace plan for Ukraine, raising hopes for a ceasefire in the Russia-Ukraine conflict. The US sanctions on Russian oil may have prompted Putin to engage in talks with Trump. A ceasefire would lead to the US lifting these sanctions, allowing Russia to continue earning foreign exchange through oil sales. This would spare China and India from higher punitive tariffs for violating sanctions, and a decline in oil prices could ease inflation, enabling the Federal Reserve to initiate rate cuts. This outcome could be a win-win, but its realization depends on the results of the US-Russia summit. US stocks rose last Friday, with Apple leading the charge, gaining 4.2% to close at 229.35 US dollars. The Nasdaq climbed 207 points or 1% to 21,450, hitting a new closing high. The Dow rose 206 points or 0.5% to 44,175, and the S&P 500 gained 49 points or 0.8% to 6,389. For the week, the Dow increased 1.4%, the S&P 500 rose 2.4%, and the Nasdaq surged 3.9%. The Nasdaq Golden Dragon China Index, reflecting Chinese stocks, fell 19 points or 0.3% to 7,502. Tech stocks performed strongly, with Apple up for three consecutive days. Tesla rising 2.3% and Meta and Nvidia each gaining about 1%. Micron surged 6%. On the earnings front, Expedia beat Q2 profit expectations, initially spiking 13% before closing up 4.1%. Pinterest missed quarterly profit estimates, with its stock dropping 10.3%. Under Armour issued guidance far below expectations, causing an 18% plunge. Hong Kong stocks were soft last Friday. The Hang Seng Index opened 113 points lower, struggled around 25,000 in the morning, and fell as much as 269 points to 24,812 in the afternoon, closing down 222 points or 0.9% at 24,858. The H-share index fell 86 points or 1% to 8,895, and the Hang Seng Tech Index dropped 86 points or 1.6% to 5,460. Total market turnover was 206.7 billion Hong Kong dollars. For the week, the Hang Seng Index rose 1.4%. The H-share index gained 1%, and the tech index increased 1.2%. Southbound funds net purchased 6.271 billion Hong Kong dollars in Hong Kong stocks, including net buys of Alibaba for 730 million, Tracker Fund for 683 million, Xiaomi for 472 million, Scilab for 216 million, Akasol for 201 million, and Tencent for 104 million. Net sales included SMIC for 426 million, Hua Hong Semiconductor for 335 million, HUTCHMED for 158 million, and CSPC Pharmaceutical for 132 million. Southbound funds have net bought Tencent for 12 consecutive days, totaling 6.475 billion Hong Kong dollars, and Alibaba for 5 days, totaling 3.339 billion. Year to date, southbound inflows reached 900.8 billion Hong Kong dollars, surpassing 900 billion for the first time. Technically, the Hang Seng Index fell 1,363 points from its July 31st high of 25,736 to a low of 24,373 last Monday. It rebounded to 25,150 15 last Thursday, recovering about 54% of the decline. It's now forming a symmetrical triangle in a wait-and-see pattern, with resistance at 25,100 and support at 24,500, pending a breakout. China's three major indexes opened lower last Friday and remained weak. The Shanghai Composite fell 4 points or 0.1% to 3,635, and the Shenzhen Component dropped 29 points or 0.3% to 11,128. For the week, the Shanghai Composite rose 2.1%, and the Shenzhen Component gained 1.2%. The renminbi central parity rate was set at 7.1382 per US dollar, down 37 pips from the previous session. China's July CPI was flat year-on-year, down from 0.1% rise previously, but rose 0.4% month-on-month. Core CPI, excluding food and energy, rose 0.8% year-on-year, the highest since March 2024, driven by a 37.1% and 27.3% surge in gold and platinum jewelry prices, respectively. Industries like coal, steel, pharmaceutics, cement, and lithium batteries saw improved market competition. However, the PPI fell 3.6% year-on-year, unchanged from the prior months, and dropped 0.2% month-on-month, with the decline narrowing by 0.2 points, indicating persistent deflationary pressures. We Macau's parent reported a 9.5% year-on-year drop in Q2 adjusted property EBITDA in Macau, missing expectations, with its stock falling 7.4%. MGM China reported an 11% drop in interim profit, with its stock declining 6.9%. Other gaming stocks faced pressure. SJM and Melco International fell 4.3% and 3.7% respectively, while Galaxy Entertainment dropped nearly 1.3%. Macau's gaming revenue underperformed expectations in the first 5 months, but exceeded forecasts in June and July, surpassing 20 billion Macau pesetas monthly. Thus, the weaker first half results for gaming stocks were not surprising. Conant Optical reported H1 results for the 6 months ending June, with revenue of 1.084 billion yuan, up 11% year-on-year, and net profit of 273 million yuan, up 30.7%, with earnings per share at 59 cents. An interim dividend of 15 cents was declared, up from 12 cents last year. Companies reporting results today include Ting-Yi, Kingdee, Sunlight REIT, Q Technology, Boya Interactive, Yuyuan, and Baosheng. New stock AB&B Biotech will debut today, closing at 33.88 Hong Kong dollars in Philip Mart's grey market last Friday, up 162.6% or 20.98 Hong Kong dollars from its IPO price. Excluding fees, a 200-share lot would yield a paper profit of 4,196 Hong Kong dollars. Our stock pick today is MINISO Group, stock code 9896. MINISO Group is a retailer offering a diverse range of trendy lifestyle and home products characterized by IP-driven designs, attracting consumers with fashionable, creative, high-quality, and cost-effective products. Since opening its first store in mainland China in 2013, the group has successfully incubated two brands, MINISO and Top Toy. As of March 31st, 2025, the group operated a total of 7,768 stores, with a net addition of 978 stores year-on-year. Of these, MINISO stores totaled 7,488, with a net increase of 858 stores, including 4,275 stores in mainland China, net addition of 241 stores, and 3,213 stores overseas, net addition of 617 stores. Top Toy operated 280 stores, with a net increase of 120 stores. Top Toy also began expanding into overseas markets starting in the December 2024 quarter, aligning with the group's strategy for global expansion and brand enhancement. In the first quarter of 2025, revenue grew 18.9% year-on-year to 4.427 billion yuan, driven primarily by a 9.1% revenue increase in mainland China's MINISO operations, fueled by a strong recovery in same-store sales, which accelerated compared to the September and December 2024 quarters. MINISO plant revenue rose 16.5% to 4.085 billion yuan, with overseas revenue surging 30.3%, contributing a 3 percentage point increase to total revenue share. Top Toy brand revenue soared 58.9% to 339 million yuan, propelled by rapid growth in average store numbers. Overall gross profit increased 21.1% to 1.958 billion yuan, with a gross margin of 44.2%, up 0.8 percentage points from the previous year, mainly due to higher revenue contributions from MINISO's overseas markets and improved Top Toy gross margins from a shift toward higher profitability products. Boosted by strong performances in overseas markets and Top Toy, adjusted EBITDA grew 7.5% to 1.037 billion yuan, with an adjusted EBITDA margin of 23.4%. As of March 31st, 2025, the group maintained a robust cash position of 7.255 billion yuan and distributed a cash dividend of 101.4 million US dollars in April 2025, combined with share repurchasing of approximately 255 million yuan year to date. Total shareholder returns amounted to 986 million yuan. Looking ahead, the group will remain focused on its long-term strategic goals, steadfastly advancing globalization, strengthening product offerings, and optimizing its store network. In mainland China, it will continue to expand and upgrade its sales network while enhancing the partnership program and adopting diverse store formats to further penetrate existing cities. In overseas markets, the group will tailor operations to local conditions, flexibly expanding its store network while deepening its presence in strategic markets such as North America, Asia, and Europe. Recommended buy price 39 Hong Kong dollars, target price $33, stop loss price $37. I do not hold the aforementioned stock.